I'm going to go over one of the best things an investor can do before he purchases an investment property. I'm going to go over that article and several others on today's Real Estate Daily. Hello, everyone. My name is Troy, and every day, Monday through Saturday, we go over the latest news in real estate, mortgage, and the housing industry. But before we jump into those articles, let's jump into the subscribe button. Yes, hit that subscribe button and also hit that like button. It helps the algorithm on YouTube and gives me as many people as possible looking at this. We are growing exponentially every day, and I love that growth, but let's get that 5 minutes worth of video content out to you every single day. Let's jump into it. This is a chart I saw from apartments.com. It says year over year rent growth by market, July 2022. Now, if you're an investor out there and you're thinking about getting investment, or you're an investor and saying, hey, I'm kind of struggling a little bit, let's take a look at year over year rent growth. Now, I'll start at the lower end of this scale. You have Minneapolis, San Francisco, New York, Baltimore, Houston, Los Angeles, Cleveland, Chicago. What is the common factor with all those? You got it. It is rent control. And when you jump into these, they have rent control. Now, if I go to Los Angeles, which is 6.3% year over year, well, that's not good. And what's even worse is that during COVID, for 2 years, they wouldn't even allow an investor to actually even raise rent. And then when you could raise rent, which I think they keep putting it off, actually. I don't think you can even raise rent until March of next year. They give you a 2 or 3% year over year raise, and they really limit to what you can do. So that's why when you look at it, some of these places have such low year over year rent and have low rents is because because investors cannot and landlords cannot raise rents. And that's an issue. And that's why in these states and in these major markets, people don't really want to buy here. And that's where, let's take a look at it. If I look at it, I'll just go to the cities here at the very bottom. Los Angeles is a complete dump. The homeless is out of control. Where's the Affordability Housing Act that was supposed to happen a year and a half ago? The federal government talked about it. The state definitely talked about it. And then you're looking at this and you're saying, well, 2 of the 6 or 7 on the bottom are the 2 biggest cities in California, and they just control the rent. Then you take a look on the other side of the ledger and look at San Diego County, and Orange County over here, and you're looking at they're one of the highest ones, and it just shows you too much government gets involved and they really restrict it. Now, if you look at San Diego or Orange County, you have a very little homeless out there in comparison to San Francisco, which is a complete trash mess, and LA is just a homeless. There's just an epidemic of homeless there, and they just keep getting bigger and bigger. And the city and the governor and the mayor just doesn't do anything about it. You don't hear about it because they don't want you to hear about it. But that's why it's not a good place to actually own a property, in my opinion. So make sure that if you're a investor looking to invest in a certain, cities, especially these major cities, some of them are just so restrictive, they're going to hurt you. Next article, Blackstone says it's good to own real estate in an inflationary environment. Well, absolutely it's good. Why? Is because it keeps my mortgage payment the same all the way through. We just went over rents. So the lowest amount of rent year over year was Minneapolis at 3%. Then it jumped to 5 and 6%. So imagine every single year you're jumping 5 to 6%. Or if you looked at Orlando at 16% or San Diego at 12%, 12% year over year jumps versus having a 30-year fixed mortgage the same. All day long you want a fixed mortgage. But it's still funny how people out there are saying, hey, I'm going to wait on the sidelines until some type of event that shows up somewhere down the road where housing prices come down. I tell people that National Association of Realtors, NAR, came out and said there were 5 million buyers more than there are homes. If that's a fact, new home builders are not going to help you out, guys. Not at all. You're going to be a renter, and you're going to be a renter for a while until you take that plunge and become a homeowner and become a buyer. Next article. This is one I've been saying over and over, and Yahoo News is starting to say it too. It says the stock market has misread signals from the Fed, and a pivot on rate hikes is far from happening. I keep saying this over and over. I think that Jerome Powell came out and said things that were a lot more dovish in the last Fed meeting news conference because it was politically driven. It wasn't any other reason why. Since then, you've had no less than 6 other Fed chairmen across the United States come out and say we are still in a major inflationary environment and that they plan to raise rates in the near future, and especially now since jobs are stronger. The stronger the job market, that means more inflation is going to stay here. You have more people with more money, they're going to spend it, and they're pushing inflation up. Now, let's go over what happened tomorrow. The CPI number comes out tomorrow. It is predicted to be 8.7. But guess what happened today? Fed chairman out of Cleveland, I believe, opened their mouth and said it looks like the numbers coming in at 8.9. And that's why you saw the stock market, especially the NASDAQ and the crypto markets, take a big downturn today. And they haven't really recovered from it because it was off. It's not as low as people thought it would go down. 9.1 in June. 8.9 in July. Guys, we're not even close to being out of this. The Fed's talking about 2% rates. There's no way we're being in the 2% rates anytime this year. So, I'm just giving it to you straight. I think that, this should have been the actual news a week ago, but it's down the road. Everyone's getting euphoric. I'm starting to see people come back in the stock market and the retail come back in crypto market. And when I see that, it scares me, because those are the people that are lambs led to the slaughter. Last article, rates. Rates are pretty much flat across the board here. We're seeing 30-year conforming at 5.44. It's flat. You're seeing 30-year jumbo went down about 8 basis points, which is good because we saw a tear up on that. And then 30-year FHA just ticked down to 5.37. This is 5 basis points down. We're seeing rates float down. I know that if you get into a competitive environment and you compare between mortgage companies, you can get rates that are just slightly below 5 right now. So depends on the area of the country you're in, and it depends on each actual county and how they perceive the value in the rates in those counties. Guys, thank you very much for joining me today. Again, if you have any comments, please leave them below. I'm more than happy to go over them with you. I am somebody out there that wants to give you the most updated information and give you accurate information. Unlike a lot of people here on YouTube, I am boots on the ground. I have buyers, I go show buyers. I have listings, I have sellers. I show them. I know what's going on. I see it. My team sees it. We relay information, and we're giving you the most accurate information out there today. Guys, take care, and I will see you tomorrow.